Our corporate market is growing quite substantially. The word that we keep coming back to describe our product is flexibility. And consumers need flexibility and businesses need flexibility as well.
Hello, and welcome to TSN's ASX Investor Podcast, StockTales. I'm your host, Russell Katz. All thoughts, opinions, and analysis expressed on this show should not be taken as an excuse to avoid doing your own research. Because remember, nobody ever made any money being lazy. A more detailed disclaimer is available at the end of the show. But for now, let's dive into today's episode featuring Chris, the CEO of Carly, ticker code CL8. Carly has had an explosive growth over the last half at 84% revenue, only on a 41% increase in its fleet size. Now, this isn't your standard car rental agency. As a matter of fact, it's not even a car rental agency. It's a car subscription service, a new type of product that has been exploding in growth in the United States and Europe, but hasn't really seen any other competitors in Australia. This sits right in the middle between your car leasing and your car rental. As a matter of fact, some leasing companies in Australia even divert customers over to Carly. Now, without further ado, I think the best person to tell you about it's Chris. So with that, Chris, welcome to StockTales.
Thanks very much, Russell. Great to be here.
So Chris, we've seen a lot of transition with the online economy over the last number of years. Can you just really quickly tell me, how does car subscription differentiate itself from car rental?
Car rental is much shorter than car subscription. We like to think that subscription is longer than a rental, but shorter than a lease or a loan. So our average subscription period is about 5 months, and that's across both consumers and also businesses. You'll find that the average rental period for a vehicle is between 7 and 14 days. So we're much more of an alternative to a lease, loan, and purchasing a car outright than we are to a shorter term rental proposition.
That makes a lot of sense, but just straight off the bat, why would I want to go for a subscription instead of leasing? I think this is important for investors to understand the underlying model here.
If you're able to commit to 3 to 5 years for buying or financing a vehicle, absolutely, that's probably the most economically wise decision you could take. However, if you need to sell the car or break the loan in a year or 2 or 3, that can work out to be very expensive. You incur depreciation, there are financial penalties. It's a very difficult thing to do and very expensive. So with subscription, you give 30 days notice and you can hand the car back. So for subscription is for those people who would normally buy a car, but they're just not sure how long they need it for, or they do know that they need it for a shorter period of time. So we offer them that flexible option, get the car that's right for them now, hand it back when they no longer need it or when they need a different type of car.
Well, we are an investing podcast, not an advertising, but I think it was very important for investors to understand the fundamental principles. And look, at the end of the day, this is a new product. It's something that I think Carly has done an extremely good job on, and I can back that up by saying your revenue growth has been quite exceptional, rather consistently. So you guys really are seeing this new model generating quite a bit of demand in Australia. Are you seeing that mostly in the cities? Carly is based in Sydney, or are you seeing that spread out throughout the rest of the country?
We're a virtual business, so wherever we have a supply of vehicles, we can be operational in that area. Our core base is in Sydney, Melbourne, and Brisbane, but we also have vehicles in regional areas, and we're talking to a number of corporate clients in other states at the moment. We don't really need bricks and mortar locations to expand our business. We acquire our customers online. All of our identity verification and payments are done online. We have partners around the country who manage and hand over our vehicles. We have a national repair network for the vehicles. So we can be wherever our customers demand our cars to be.
So going back to the revenue growth that you guys have experienced, it's been a bit of a rocket ship upwards for the last few quarters. Can you explain exactly how the market's been reacting to that? And by the market, I don't mean the stock market. I mean your actual market. I understand, and I think we've gone over the whole basis and pitch for the consumer. But you guys really have been making some serious indentation in achieving market share. So do you think that this is just the beginning, or with, we're not looking for forecasts, of course, but where do you think this is going?
We're really only touching the surface of the car subscription opportunity. We see that our biggest opportunity is educating the market. Most people we talk to who become our customers haven't heard about car subscription before they became a customer. So we know that when we speak to consumers and businesses about the proposition, we explain how it meets the needs for flexible access to a car. Our conversion rate is very, very high. So our opportunity and our challenge is to educate the market and be there at the right point in time when people are making those decisions about their next car.
So yeah, on that note, you guys really don't have many competitors in the space. I mean, you could, immediately you might think, if you didn't hear our intro, that your competitors might be rental cars or leasing companies as well. But the truth of the matter is, you guys sit right in between those two big ones. So from a competitor perspective, you guys more or less have an open field.
That's right. We don't feel that we compete with leasing or finance. We don't compete with rental. We are that, as you say, right in the middle at an average subscription period of 5 months. There are some other players in the Australian market, but we're the only ASX listed company 100% focused on car subscription. There are some very big players in the US and Europe that are growing quite well, a similar sort of growth rate to us as well. So, we see there's a big future for car subscription. We've had a big vote of confidence in the business when we brought on SG Fleet as our second largest shareholder. SG Fleet is the largest fleet management and vehicle leasing company in Australia, and they refer their customers to us when they need a vehicle for a shorter period than 1 or 2 years. So they see the opportunities in the market. They see that we're able to meet the needs of their customers, and they're happy to refer their customers to us for their vehicle needs.
Well, I got to tell you, Chris, that sounds a bit like proof in the pudding to me. That you sit in that I don't want to call it niche middle space, because I think that especially as cities become more congested, which we're definitely looking at in Australia, the demand for having a car for a set period of time, and then other times you take public transportation, is probably going to only increase. But let's switch gears for a second from the retail to the commercial. B2B customers, if we look pre-COVID, that must have been one of the markets pre-2019. But how has that market recovered? What are you guys seeing in your internal data?
Our corporate market is growing quite substantially. The word that we keep coming back to describe our product is flexibility, and consumers need flexibility and businesses need flexibility as well. But also businesses are a bit risk averse, so they know they need to jump on opportunities very quickly before their competitors do. They need to get sales teams on the road. They need to get their employees out to their sites. But they've also got one eye on the risk meter and saying, well, what happens if the business dries up in 6 months? What happens if the market changes? What happens if there is another pandemic? So sometimes businesses are not very willing to take on long-term debt for vehicles. So subscription allows them to get the exactly right car now for their employees, get as many as they want, and when their circumstances change, they can hand those cars back with only 30 days notice. So it allows them to ramp up quickly, and then to manage the fleet of vehicles at the appropriate level over a period of time.
Now, Chris, I actually have to admit something right here. I teed you up a little bit to bring in another topic I really wanted to talk about, which was your EV trial that you guys just launched. Now, for those of you who are not watching the video, I just will let you know that on the left-hand side of his background, Chris has Carly EV trial. For those of you who are looking at it, you can see him point to it right now. But what's really interesting about that is you were talking about risk, and you're talking about corporations with risk. We just saw a lot of major rental companies who said that they bought the wrong EVs, they overestimated the demand, and they're having to sell them for a rather significant loss. But at the same time, I mean, what was it, a month later or the same month, you guys announced that you're actually expanding your EV fleet, and you recently launched the Try Before You Buy. So I know that that has a retail component to it, but right now we could just focus on the corporate side of it. Are you finding that companies really are, because of their risk adversity, like we want to be green, but at the same time, we're A, not sure about what EV is best for us, and B, we're not sure if there's enough charging stations for our employees.
Exactly. And we're seeing a lot of uncertainty in the market. A lot of businesses know that they need to either investigate moving their fleet to electric, or they need to move there fairly quickly. However, they've got 1,000 different questions, and our view is no expert can give you all the answers to those questions. We think the only way to build confidence in your decision making is actually just to try some EVs in your fleet. But as some companies have found, and some rental companies, especially in the US, found, they went in too early. They bought very expensive EVs, and they bought the wrong type of EVs, and that's turned into a bit of a disaster for them. So what we've done is create the EV trial, and this allows businesses to subscribe to a number of EVs for a month or more. It could be anywhere, 1 month, it could be 3 months, 6 months. And then we actually send a survey out to their drivers as well to get any feedback about the positives and negatives of driving the vehicles. There's a lot of data that we can share about the usage of the vehicles as well. So when a business is making a decision about transitioning to EV, they can use the EV trial to answer a lot of questions so that they can make really informed decisions going forward. And those decisions can be about the speed of the transition, what types of use cases EVs are best for, what the economics are. So there's lots of things that we can do to help them. The alternative, if you didn't use the EV trial, is you buy a number of EVs, and then you might find that you've made wrong purchase decisions, and you're going to pay for that when you go to sell those vehicles, or you may have to sell them fairly quickly because they're just not working for you. So we're seeing a lot of interest in this product from businesses that have been thinking they need to move to EV, but have been sitting on the fence due to the uncertainty.
Yeah, and at a steep discount. I mean, at the end of the day, the secondhand EV market has definitely seen a bit of a glut, especially internationally recently. It's funny you were talking about all the data you're providing. It just made me think about how the big four consulting firms have been in the news lately for all their cuts, and it sounds like you're taking some of their work. They can't charge 40 grand to tell you what EV to drive anymore because Carly's stealing their thunder there. And
we think our customers are the best people to answer their own questions. We just need to give them the tools to do it.
Yeah. Now let's move on to a retail perspective, and I really do want to kind of focus on the EV side because it does seem like this is going to be a considerable part of Carly's future going forward, especially with a lot of the partnerships that have been announced in terms of the cars that you've been acquiring. So can you talk a little bit about the retail side? I mean, obviously there are some direct correlations, right? So you're talking the data, the questions, the upfront cash. Are you buying the right ones? Corporations ask that, retail asks that. But what are the kind of the key differentiators between those two consumers?
But you mean between consumers and businesses?
Yeah. So whether the business, yeah, exactly.
Yeah, well, I think there aren't that many differentiators, really. It's just a matter of scale. A business is buying a lot more vehicles, and they have a lot more different use cases. Whereas when you're a consumer, you understand your own use cases. It's yourself, your partner, your family, going to work, that your use cases are fairly definable. But for a business, they might have different types of employees doing different things at different times in different areas. So there are quite a few different questions, but at the end of the day, it's very hard to do your own research on this and rely on Google to give you all of the answers. We really feel that experiencing an EV, and I'm doing it myself right now for the first time. I'm driving an EV and I'm trialing it. I haven't purchased it. And I'm finding out there is lots of different things about the way it drives. I'm learning about iPedals and regenerative braking. I know that I have to learn about charging, but I haven't charged yet. So there's all these things that I'm doing, but I'm doing it slowly over a period of time. So I'm not pressured, so I don't make big mistakes. I'm not going to run it down to zero and then look for a charging station. I'm trying to do it, in a reasonable period of time without any stress, So I enjoy the whole experience as well.
Yeah, that makes a lot of sense. So talk to me, Chris. Let's switch gears here a little bit and focus more on the stock itself. So, obviously this is what you could call a small cap, but with, as I mentioned at the beginning, very high revenue growth, and not a lot. We've seen some capex, but you really aren't seeing a lot of fixed costs because, as you said, you guys can be anywhere that you have distribution. So can you talk a little bit about the financials and where you think investors should focus on going forward? Do you want investors to be focusing on your margins, or do you want investors to be focusing on your growth?
We're really focused on scaling the business, but scaling it profitably. So we've got a very tight rein on our costs. The only costs that we're introducing into the business are to increase our revenue. So that's in the area of marketing and in sales personnel as well. The rest of our cost base is relatively flat from quarter to quarter. However, our revenue is increasing quite substantially. So in the last half year, revenue increased by 84%, and that was on a 41% increase in fleet size. So we are growing revenue much faster than our fleet and delivering more to that bottom line. So we are very much focused on margin. We're very much focused on customer satisfaction. We're not just going for growth for the sake of growth. We want that to be sustainable growth and for it to be profitable growth as well.
Yeah, I just want to underline that 84% growth, especially in this market. With consumer confidence, everybody's taking second guesses at what it is, but they've been doing that for the last 6 months. So the fact that you're able to do that over the half year, I think really shows that you're onto something. Well, Chris, I really want to thank you for coming on StockTales. It's been great having you, and we look forward to following your stock rather closely.
Thanks very much. Great talking to you.
Cheers. Have a great rest of your day.
Thank you for tuning into the disclaimer. Investing money into capital markets involves risk and could result in losing money. The people on this podcast express their own views and may or may not have been paid to appear. Only you can determine if a particular investment is right for your portfolio. Always do your own research before buying or selling any security or investment. Remember, past performance is no guarantee of future results. One should always view any investment with their own personal risk tolerance, liquidity, tax situation, or anything else pertinent in mind. No person on or related to this podcast was making any offer or solicitation.